All right, here we go. What's going to be really helpful for this session is if we're able to remember that this is about an 8:30 economic event. I'm getting an echo here of myself. There we go. Is that this is a high impact economic event. It's also going to be helpful to remember as we go through this process is it's futures only. Now, if anybody out there is listening to me and they're Forex traders, yes, you can trade foreign exchange for this particular event as well, for this PCE. And then ultimately, really don't choose more than two, right? So we know that some of the rules are it's day trading. It's an 8:30 event, which means the entry is going to be immediately after the release. I'm not putting us in a trade before the release, right? That's not ever what I'm looking to do. If I'm going to talk about a trade that y'all can choose to take or not take, it's after the economic event because we're counterpunching. It's a reaction. And then the symbols, I would never pick more than two. I would never pick more than two symbols for any kind of high impact event because one, it's more risk. Two, it's actually more to manage. All right, how do we choose which two symbols? So far, we know why we care about the PCE because the Federal Reserve does. Why do we care about the Federal Reserve? Because they move rates. Why do we care about rates? Because it helps give us insight into indices and stocks. The economic event comes out at 8:30. I've got to pick two symbols that I'm going to keep an eye on. And typically what I will tell you is avoid gold and bonds. For any kind of these 8:30 hot zone events, avoid gold, avoid bonds. I'm typically going to be taking a peek at S&P, NASDAQ, Russell, Dow. So I'll be looking at the indices. And then furthermore, I'm going to try to find which two, or even just one, could have some sort of edge in terms of the previous session close and the hourly price movement range. All right, that brings us now to what are the tools that we're using? Really simple, gang. I want to know what the structure is, and I'm looking at my other screens here. It is a neutral structure across the Russell, Dow, S&P, and NASDAQ. So I don't have a trend this morning. Another thing that I can note is that price is below the previous session close on all four of those indices. Okay, so now I know I'm going to be a little bit more bearish. The next thing I would like, however, is some kind of proximity to, I'm going to show you the two levels I'm going to look at. All right, so I know that my tools are going to be previous session close. I want to look at the underlying market structure, which is down in here. All right, here's my previous session close. And then I'm looking at where the hourly price movement range can be. So I'm going to be mildly bearish on this one, right? Now, I would prefer that price get into the middle of this range, which would be considered the moderate part of the zone. And that would trigger a short sell on ES or MES, right? So this would be micro S&P or micro NASDAQ. Now I can see that there's a little bit of a space. You can see here, there's a little bit of a space between the previous session close right here and the lower edge of the hourly price movement range. Ideally, the previous session close is above the entirety of that red volatility zone, the hourly price movement range. The best way to think about this setup is what I like to call first come, first serve. Whichever zone gets hit first, that's the entry zone. And the opposite becomes the first or second, usually second, target. Now, you might say, Rog, what if we shoot straight down, right, instead of straight up? My expectation for follow through for the most part is bearish because we're below the previous session close, right? Now, there is a possibility because this thing is just sort of hanging out, not quite in the middle, but it's not really picking a side super clearly. Just like I could look at the middle of the red zone here, I could look at the middle or lower edge of the green zone. Because frankly, there's not a huge advantage to walking into this event and being absolutely bullish or absolutely bearish, right? There's no advantage there. Maybe on the NAS the most because the NASDAQ previous session closed, a 4 p.m. cash close from yesterday, Thursday, and the hourly price movement range, the typical number of points we tend to move for 8 to 9 a.m., you'll see those two levels are a little bit closer together. So I have this level here. So it's a little bit more in line. And another thing I can see here, 20,000, that's a major psychological level. So the middle of that zone would be great. And then I would look for price to move lower. All right, let's talk a little bit about targets. We've talked about what tools, mostly the previous session close, hourly price movement ranges, and the underlying structure. Because if we had a downtrend on these 5-minute time frames, I would absolutely just be bearish. Today, I could be a little bit of both. And one of the things that I'll do in a scenario like this is, can I bracket? Right now, since I'm using limit orders, not stop orders, not market orders, definitely not market orders. Since I'm using limit orders, I can place a limit order to sell, right, up in this area, and I can place a limit order to buy down in this area. And what happens is whichever one is hit first, the other one is typically a second target. All right, so let's say we hit the buy zone first, this becomes the second target. Well, that kind of begs the question. All right, Rag, I get that, but where's the first target? What I'm going to do is take a look at this lower edge here and this upper edge. So the distance between these two zones, and I will cut it in half. Right, I'll just cut that zone in half. And so that midpoint, and it's amazing how often that midpoint is so valid and powerful as a first target. So the midpoint would be right in here, this midpoint, that would be the first target. So there's your first target. If this is hit first, right? First target, second target. If this were to be hit first, first target, second target. So this means that by bracketing, by putting a limit order out there, whichever level gets hit first, the other one is a potential target. And at that point, I would have to, if I get filled, manually put in a limit order to buy 19,941 if I'm short, or sell, limit order to sell 19,941 if I'm long, right? So don't put that first target in. We don't know when we bracket which one is going to get triggered, because then the take profit orders, if we're short, or buys, right, in order to flatten or scale out, and if the take profit when we're long or sells. Right. So this is basic stuff, and it's going to happen quickly. It's super volatile. The only hot zone that's likely more high impact, therefore riskier than PCE, would likely be things like non-farm payroll, and clearly any time that the Federal Reserve is talking about rates. And my son's coming in right now through the window here in my office. All right, we have 3 minutes before the economic event. So we know what tools we're using, what symbols we're using, kind of the larger conversation of why do we even care? What are the rules? So the rules are wait until after the economic event, because a limit order is designed to be hit after. So for example, the moderate buy would be roughly 19,000, call it 850 down to 19,817 and a half. All right. That's for the limit order to buy. The limit order to sell is 20,035, say in 3/4, to up to 20,064 and a quarter. And this is on the NQ. I'm going to do the same thing on the ES. Let's do the same thing here. The middle of that zone puts us at about 5711 and a half down to 5704, call it 5705. So pretty close to 57 major psychological level. The moderate to the upside, 57, call it 51, up to 57 and 3/4, right? That's the ES, that's the NQ. And I would focus for the most part on those. You can do the same thing for the RTY. You can do the same thing for the Dow. We're talking futures. All 4 of those are liquid, I would just simply avoid gold market and bonds for hot zones like this. And don't do more than 2 of these at the same time. The middle of the zone, right? That middle of the zone is going to be where we focus on the first target, and just cut that zone in half. And here's another thing too, gang. If the trade doesn't trigger by 8:33, I leave it alone. If the trade doesn't trigger by 8:33, I'll leave this alone. Now, in 30 seconds, depending upon the size of this candle, in 30 seconds, the red and green zones are going to adapt by design. They're going to move by design according to the volatility we see. If there's no volatility, and this is ultimately what they call it, a nothing burger. I like hamburgers. So if it's a nothing burger, we won't see much movement. But if we get a wick, you'll see immediately that these zones will move. So it's so important we have these in place before the hot zone, as well as these limit orders already out there. We talked about the bracket. I lost my notes there. We talked about the bracket that I'm going to focus on. There we go. And that's the limit orders on both sides. And it's got to trigger by 8:33. So the countdown's on. If it doesn't happen in 180 seconds, then I am going to leave this particular part of the morning alone. And then I'll wait for the bell and look for opportunities after the bell. The closer we get to that middle of the zone, right? That's where the NASDAQ could trigger. There we go. And the closer we get to the middle of the zone, that's where the ES could trigger. Now, for those of you that are wondering, Rog, could you go with the aggressive level? That it's valid as volatility-based support. And one of the things I do love about doing these bonus sessions with the 8:30 hot zones is that allows everyone to see sort of a stress test of these hourly price movement ranges, of this indicator that allows us to understand the context of support and resistance through historical volatility. Yes, I mean, technically it's support. Would I view that as a level to buy? It wouldn't be my first choice, but if you want to note the way in which price action is responding, please do, because these things are going to continue to print all day long. So it's not just about using this at 8:30 in the morning. We'll be looking at it 9:30, 10:30, 11:30, and so forth. So you can take note of that. So the ES so far is the only one, and this is a pretty mild reaction so far. PCE, that tells us really a couple basic things. It's in line. PCE is in line. And that's usually going to cause a little bit of movement, but not a lot of dramatic movement. So if the PCE forecast for year over year was 2.7 and it comes in at 2.7, not a big deal. If the US core PCE month over month was expected to come in at 0.3 and came in, by the way, at 0.4, that's a little bit worse. Hence, probably the movement wandering to the downside and not the movement wandering to the upside, because let's see here. Make sure I'm reading this right. It was expected to come in at 0.3. It came in at 0.4. So it's a little bit higher. It's a little bit hotter, which is actually a little bit bearish. Okay. If it was 0.2, it would have likely sent a drift to the upside. So we've got all these different PCE indexes, year over year, month over month, etc. And for the most part, from what I'm seeing, they are in line. So with a slight tick higher in that month over month. There is also a U.S. consumer spending month over month, which actually is a little bit lower than forecast. That would actually be a little bit bullish. Bad news is likely a little bit still good news, and good news is still a little bit bad news. And any news that suggests that the Federal Reserve has to wait to cut rates would clearly be a little bit bearish. Okay, it's a little too soon to say there's going to be a lot of adjustment here. Usually it takes a good 20, 30 minutes to really see the Fed fund futures respond, and then this graph. But you can see so far, and it's 8:33, right? You can see so far, nothing's changed dramatically. But when I'm with you all for Charts and Coffee, which will be at the top of the hour, we can get a better look at. In fact, we'll kick off Charts and Coffee with a look at the only macro that matters. what is the Federal Reserve going to do? Realize that all these little hot zones that we look at together, all these little hot zones are just stepping stones to understanding ultimately what the Federal Reserve is going to do with monetary policy and monetary policy messaging. And that is the only macro truly that matters. Recession, Rog, what about recession? Doesn't matter. Rog, what about fill in the blank? Unless this is something that has to do with monetary policy, it's usually not a big deal. All right, that's it, gang. The only thing that seems to have touched by the cutoff was the aggro level of the S&P. So this is a no trade day. And you'll notice that the hourly price movement ranges have adjusted to the lower low. So everything's on the resistance side shifted a little bit lower. And these will be the zones that will carry through 9 o'clock. And then after 9, we'll have the 9 to 10 o'clock hourly price movement range. So again, these are adapting for every single hour of the day and the unique volatility that, that tends to reflect it. So no trade here, gang. It's not, it's past 8:33 and there's nothing that I'm going to be doing. All right. So there's absolutely nothing I'm going to be doing here. So then when I look at, let's see, NASDAQ, just didn't get there. Dow also just didn't get there. The Russell, take a peek. All right, just didn't get there. So what am I looking for? I'm looking for price to get down to at least the middle of the green or the middle of the red zone. All right, that's it. And sometimes, again, if these come in line like this one did, it's not much to do. But, if nothing else, preparing for these gives us an idea of how and when we could trade futures. These are the June contracts of the Russell Dow S&P NAS, or the M contract. The macro implications are pretty big. Macro implications being that this could change the way the Federal Reserve looks at cutting rates, since it's really flat, probably very, very unlikely. All right. And then last thing is looking at, let's see here. I'm just curious what the bonds are doing. So we'll take a look at ZB. All right, bonds are moving straight up. Wow. And by the way, at the onset of this, I said I don't trade bonds. I don't trade gold for these. These tend to be far more volatile than proper risk management can be recommended in terms of, look, these can blow way past the historical volatility very often. So I tend to not want to trade things that could be wildly volatile, if not violent. Look how much more we're getting movement out of bonds than really any of the indices. So, and again, my focus is usually the NASDAQ and the S&P for these hot zones, and I'll focus on those two. Please don't focus on 4, 5, 6, 7. It's too much volatility. It's too much risk. It's too much speed to really manage multiple positions like this. All right. And so slight drift lower, which, are we completely surprised that we're getting a slight drift lower when price action is below the previous session close? Yeah, probably not. Right. There's your previous session close. Yeah, I'm going to expect a little bit of a drift below her as long as we're below some key levels. We're below the top tier dots. We're below the previous session close. This is the heavier side of price action. All right. So I'll be back at 9 o'clock at the Simpler Trading YouTube channel for Charts and Coffee. We'll see what has transpired between now and then. And then we'll we reset everything and we look for what the next set of opportunities are likely to be. Does anyone have any questions for me? Anything from impact, bracket? The biggest part of the rules is not before the economic event. Pick 2 symbols and 2 symbols only. Use limit orders and wait for price to come to you. And then lastly, the cutoff is 8:33. That's really those are basically the rules. The symbols, again, usually the indices are going to be solely what I'm focusing on. If you are a currency trader or a Forex trader, that market is open now. This is not about stock option trading, ETF option trading, stock trading, because those markets simply aren't open in the sense that they're viable alternatives to the futures. Futures are moving. There's open interest. There's volume. They're really good choices. Wow, this sun's coming in really brightly now in the office. Okay, so and then the tools, previous session close, multi-structure, hourly price movement ranges. All right, cool. That is it, gang. That is it. And that's what we're looking at. Okay, gang, be good to each other. I'll talk with you soon.